Everything you think you know about Bitcoin's famous 4-year cycle might have just been destroyed by Jerome Powell. Today is not a normal FOMC day. This is the day Jerome Powell walks on stage with 90% odds of cutting rates into blind economic data in one of his last major actions as Fed chair. And this may be the moment Bitcoin's cycle breaks forever. Because if the Fed ends QT, cuts rates, and signals that QE is quietly returning, the liquidity flip, the one Bitcoin needs for its next super cycle, might be happening right now. And if he doesn't, if Powell comes out hawkish, brother, markets could puke so hard they won't recover until Trump fires him. Meanwhile, while everyone is distracted, Cynthia Lummis is dropping a Bitcoin market structure bill that could literally greenlight the U.S. Strategic Bitcoin Reserve. And Cathie Wood, Ledn, and the business cycle itself are all saying the same thing. The old 4-year Bitcoin cycle is dead. And what comes next could be absolutely insane. And once your brain is melted from that, we're locking in with Stinky Finky before unleashing the most bullish news of the entire year. We're talking U.S. banks now allowed to buy and sell Bitcoin. The CFTC testing Bitcoin as collateral. Lummis pushing to eliminate taxes on Bitcoin payments. And Jack Mallers reminding the world why they have to print. Yeah, strap the hell in because we have a massive show today. All right, here we go. Today at 2 p.m. Eastern, the Fed is expected with 88 to 90% probability to cut rates 25 basis points. But the cut is not the story. The tone is the story. And there are 4 ways this can go. Scenario 1, rate cut plus a dovish signal. Powell hints at more cuts coming, talks about liquidity support, maybe even whispers about ending QT. Markets go absolutely vertical and Bitcoin pops instantly. Scenario 2, rate cut plus a neutral tone. No guidance, no real clarity, just Powell mumbling his way through uncertainty. It's kind of par for the course, and if this happens, markets whip around and Bitcoin stays choppy. Bullcrab. Scenario 3, rate cut plus QE hints. Powell suggests balance sheet expansion later in 2026, even implicitly. Bro, that's the supercycle button. All risk assets go full send. Scenario 4, rate cut plus hawkish tone. Powell talks about inflation, says he's concerned, signals a pause, the market dumps. Bitcoin takes a short-term hit, but here's what makes today historic. Powell is cutting blind because the government shutdown delayed the jobs data. There is no October unemployment rate. BLS November numbers aren't coming until mid-January. This is the most consequential monetary decision in a decade. And Powell is driving with no dashboard. And then it gets even crazier. Trump just might have blown up the Fed entirely. Roll it.
We have a lousy Fed chair. And by the way, it looks, you're going to have to check this, please. I just heard it could be that all 4 commissioners in the Fed signed by Biden, including Too Late. You know who Too Late is? Too Late, Powell? Jerome Too Late. He's too late with his interest rates for a reason. He's a bad guy. He's not a smart guy, but he's a bad guy. Too Late. Is he going to lower rates a little bit finally? Did you see where Jamie Dimon, respected guy, said, you got to get the rates down, you schmuck, you know? But I hear that the auto pen may have signed those commissions. If they signed those commissions, now maybe I'm wrong, but we're going to check. Have you checked that? Are you hearing it? Who signed it? Did he sign it or did the auto pen sign it? I'm hearing the auto pen. You know, you can't use the auto pen unless it's very strongly authorized, unless you show you know what the hell you're doing, which is impossible of him to show. So, I don't know. I think it's something we have to look into. You put people there that are not authorized to be there. I know I signed Chris Wright. I signed everything, but I signed Chris Wright. If I gave you an auto pen, they could throw you the hell out of here, Chris. The difference is they would do it, you know? We try and be too nice. No, would you check that, Scott, okay? Because I'm hearing that the auto pen could have signed maybe all 4, but maybe a couple of them. We'll take 2. So look at that, Biden.
He's publicly questioning whether Biden's Fed picks are even legit. And he's openly telling the world, yes, the next Fed chair will be expected to lower rates immediately.
I want to ask about interest rates because a lot of Americans agree with you that they're too high. You're going to pick a new Fed chair soon. Is it a litmus test that the new chair lower interest rates immediately?
Yes. Well, this guy too should too, but I think he's a combination of not a smart person and doesn't like Trump.
This is the orange man saying, I'm taking the wheel in 2026. The Fed will run the economy hot. And Powell, his term ends May 2026. Kevin Hassett is waiting in the wings. Today might be Powell's last stand before the entire institution flips. Now let's hit the numbers the mainstream media won't show you. Small businesses lost 120,000 jobs in November. Large corporations, on the other hand, gained 90,000 jobs. There's like two Americas. One's thriving while the other's drowning. ADP headline, minus 32,000 jobs, the worst since April 2020. Inflation stuck at 3%, the 2% target, a fairy tale. All right, deep breath. Let's pivot to the massive news from the Bitcoin senator. While everyone is staring at Jay Powell, Cynthia Lummis is quietly rearranging the entire US Bitcoin framework. The bill could pass within weeks with bipartisan support. Not only does it outline Bitcoin's regulatory structure, not only does it clean up the CFTC versus SEC mess, it sets the foundation for the U.S. strategic Bitcoin reserve. Yes, the same SBR we've been talking about for months. Lummis wants comments from both sides by the end of the week. Markup next week. This is moving fast. And at the same time, she wants to eliminate taxes on small Bitcoin payments by next year. Let that sink in. America is preparing the legal structure for mass Bitcoin adoption. Now, with the macro and the regulations on the table, it's time to tackle the demise of the 4-year cycle. Time to kill a sacred cow. The Bitcoin 4-year cycle did not die because of the halving. It died because the business cycle diverged. Every major bull run in Bitcoin's history began when liquidity flipped. And guess what? Liquidity has not flipped yet, which means we are in the setup phase, not the blow off top. It hasn't even begun yet. Cathie Wood lays it out here.
Bitcoin is behaving more like a risk-on asset. It has played the risk-off role at different times during the European sovereign debt crisis, during our regional bank crisis. But right now, it's risk-on. It is climbing another wall of worry, and that is the 4-year cycle. We think the 4-year cycle is going to be disrupted, and what I mean by that is Bitcoin regularly dropped 75 to 90% in its early days. The volatility is going down. It's down about 30 some odd percent. And I think there's a fear of the 4-year cycle. We think that the move by institutions into this new asset class is going to prevent much more of a decline. We may have seen the low a couple of weeks ago.
No more monstrous drawdowns, no more predictable halvings as drivers. Then Ledn comes in with the hammer.
So are you in the camp of four-year cycle still on cue, no real change in how these cycles have gone in the past, or do you think that has shifted some?
My base case is the four-year cycle is no longer really relevant. It arguably hasn't been relevant for the past cycle either. Early on, whenever the supply halving happened, that was a very big change to Bitcoin's kind of new supply coming out. Whereas now, the annual supply inflation rate is well under 1%. It's a lower supply growth than gold as on a percentage basis. And so I don't really view that as like the main driver anymore. I think there's potentially some selling around the psychology of the four-year cycle.
Is this a time to DCA? Bitcoin trading literally as we record at around 90K. Is this a DCA time for Bitcoin?
I think so. And almost by definition, if someone's dollar cost averaging, it's always the right time. That's the kind of point is you're not really trying to time the market. I think it's more of a question of, is it time to accelerate the DCA a little bit? Generally speaking, when the sentiment comes off, we've seen the Bitcoin Treasury MNAVs disappear. We've seen some of the metrics I look at, like market value compared to on-chain cost bases, that is compressed quite significantly. Makes it a lot more attractive. Overall enthusiasm is elsewhere. It's on AI, it's on gold. Public sentiment around Bitcoin is pretty low. I generally think this is the time to lean into it now. But I think as a larger slice of a portfolio, I think it makes sense to buy the fear rather than kind of buy the enthusiasm.
On-chain metrics are compressed. Treasury premiums collapsed. AI and gold stole the headlines. This is exactly the moment when long-term entries get built. But Rustin, if the four-year cycle is dead, what's next? Simple! The liquidity cycle plus the business cycle. Whenever the Russell 2000 breaks out, Bitcoin follows. Guess what just happened? The Russell 2000 just broke out of its multi-year range. Seat belts on. All right, now get your incense. Light your candles. Because it's time to summon Stinky Finky, the high priest of bulltardism. All right, sit up straight, shut the up and pay attention. Stinky Finky commands you. This is where it all comes together. U.S. banks can now buy and sell Bitcoin for customers. That is the green light. The dam is cracked. CFTC to test Bitcoin as collateral. This is the big one. Once Bitcoin backs derivatives, Bitcoin becomes the backbone of the global financial system. Christmas is 2 weeks away and Wall Street is looking for a year-end liquidity miracle. And we know one thing is certain regardless of what voodoo they try to pull. As the CEO of Strike and 21 Capital puts it, no matter what they say, remember, they have to print. Now, before we show you what's coming in 2026 and why it's insanely bullish for Bitcoin, look at our likes.
3 or 4 times, maybe.
I gotta pump those numbers up. Those are rookie numbers in this racket.
Let's take a quick second for our sponsors who keep this show on the air over at the Bitcoin Way. If your wealth lives in their system, it's not yours, it's theirs. That's why we scream Bitcoin. That's why you self-custody. And that's why you call our friends over at the Bitcoin Way. They'll walk you through multi-sig, self-custody, privacy, how to run a node, and the tools that keep you sovereign when the fiat system pulls the plug. Don't wait till it's too late. Book a free 30-minute consult today using that link in the show notes. Need cash but don't want to sell your Bitcoin? Ledn is the global leader in Bitcoin-backed loans, issuing over $9 billion in loans since 2018, and they were the first to offer proof of reserves. With Ledn, you get custody loans, no credit checks, no monthly payments, and more. Visit learn.ledn.io/simply to learn more and get 25 basis points off your first loan.
Buy every dip. The United States cannot afford to have assets go down over a persistent time frame. The U.S. stock market is a Ponzi retirement account for the United States. They need it to both store wealth for Americans and for Americans to monetize wealth where they earn tax receipts. If the U.S. doesn't have a stock market that's up 10 to 15% a year, it is insolvent because it cannot afford the interest payments on its debt. So all dips should be bought. None of these dips scream Bitcoin's going to 10K. None of these dips are talking about cats. I'm allergic to cats. Literally, I am. You learn something new about me every single week. I am physically allergic to cats. I can't be around cats. So I know nothing about a dead cat and bouncing. I know nothing about it. This is all to do with global liquidity. The point is, we're in the middle of a liquidity crunch. Again, that's kind of been my consistent theme, is that today QT ended. So first of all, for all of you, QT ended today. Quantitative easing, QE, is very likely to resume in the near term. We're very likely to get rate cuts going forward. Trump, he said and communicated, I know exactly who I want as my Fed chair.
I know who I'm going to pick, yo.
They're going to be allowed to use unlimited leverage for treasuries, create a lot of credit, create a lot of new money. We have 50-year mortgage, we have stimulus checks, we have midterms. I know I take a lot of shit for it. I think this cycle is $250K to $1 million.
Bullish reminds the world they have to print. Look at the adoption wave. Look at the macro setup. This is a once-in-a-generation alignment. 2026 is refinancing year. And here is your final truth. The U.S. must refinance $8 trillion in 2026. They can't do that at 3.5% rates. They can't do that without QE. They cannot do that without liquidity. And they cannot do that without a monetary escape valve. Rate cuts are coming. QE is coming. Trump's apolitical Fed chair is coming. And the Bitcoin super cycle, it's forming. Nothing stops this train. Stinky Finky says. Hey, hope you guys enjoyed this one. Let us know what you think below. Don't forget to like, subscribe, and give us a pamp by sharing this sound money gospel. And I'll catch you all tomorrow. Love you guys.
If you prefer to go down with the ship, you.